Well, hey everybody, welcome back to our ThinkScript class. My name is Mike Fairborn. I have to say, happy Friday. It's happy Friday. It's ahead of a 3-day break, a 3-day weekend, and I think many of you are looking forward to that. I know I am as well. Folks, did want to take a pause today and look at some of the volatility in the market. Now, we've seen volatility creep up, and when that happens, a lot of times investors, traders will oftentimes gravitate towards shorter term trades, at least initially along the lines of some of the swing trades out there. I wanted to talk specifically about the parabolic SAR. It was almost like an indicator sort of built for swing trades, but I want to enhance that indicator as well. I want to talk about it, break it down, and show you how traders could use it, perhaps in today's market. So we'll certainly add some ThinkScript code to it, as well as discuss some other ThinkScripts that have been developed recently, and a couple of the requests that I was able to handle. So with that, we'll dive into it here, folks. Good to see you all. I've been joined in the chat by a good friend of mine who does know some good places to go to have a good time. Folks, all family friendly, but he does, and he knows exactly what I'm talking about. That is JB himself, James Boyd. Great to have him here. Folks, any questions, comments you have, throw those in the chat so we can help address those for you. But yes, happy Friday to each of you. Wiley, Joe, the Life of the Fast Lane, Robert Boucher, Cosmonaut. We've got Will, Jack, Art, Scott, and others. Good to have you, folks. Let's move on over to some disclosures to get moving here. Options do carry a high level of risk. They're not suitable for all investors. Now, the information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for education purposes only. Backtesting results that we do look at from time to time in this class, those results are presented are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. Investing does involve risk, including the loss of principal. Past performance in any security strategy does not guarantee future results. Now, just a quick note as we do go through these from time to time. We talk about the basics of ThinkScripting. I'm not going to go into too much detail. I did last week. I think you guys pretty much get the sense of what I was going through, what I go through each and every week. But it's always important, to identify the goal. Is it doable in ThinkScript? Can it meet that objective? Can we, we can outline the steps. And I talked about outlining the steps, and I kind of did it last week on this screen. It might not have been that effective, as effective, but I'll try to definitely organize the thoughts correctly. A lot of times my head gets caught up in the code that I'm trying to present, and but I'll make sure I do that. We'll apply the ThinkScript tools, and we'll go through the scripts themselves, and we'll share that link, of course. Now, let's turn over to a visual here of the markets. An indicator that was brought up last week. I know Austin had mentioned it. I wasn't quite done with it, and not to the point of really wanting to present it yet, but I just wanted to show you before we get into the parabolic SAR, the PSAR, and some ThinkScript code with it. I want to talk about what I think many of you do like to see on your charts, and that is the cloud, and a moving average cloud over here. I've got a script to kind of help us with this. A quick note on these moving average clouds. How could they be useful? That might be one of the key points that investors, could look for. For example, one of the key things they could focus in on. I mean, what's the key difference with the cloud? In a lot of cases, I can kind of scoot over here. This happens to be Tesla, but if you start to really see an acceleration in terms of the difference between, let's say in this case, I've got a golden cross in here. No, I don't. I have the 1030. I'm sorry. I've got the 1030, a little bit shorter term. Golden cross would be the 50 and 200 and the 200 crossover. But the distances as that begins to widen, a lot of times that's a reference to the strength of the underlying trend. And you might very well be getting a scenario where you're getting higher highs and higher lows, and maybe even some bigger possible bull flags. We had one over here. In the future, we wouldn't know if we get that, but with the trend, that can be helpful. You can have different colors that you might want to see here as well. I'm going to go ahead and show you this. This is sort of the breakdown of what makes this maybe a little bit more helpful, is that when you go into the script, you can quickly adjust the short length and the long length over here up top. And like I said, I'll just do this. Here's the 50 and the 200, also known as the golden cross. Golden, folks, it's only golden if you're going above it. They refer to it, yeah, as the death cross if you're going below it. It's kind of a strong word there, meaning that, maybe that trend's dying. But there you go, the 50 to 200. You've got the different moving averages you can select in here. The simple, the exponential, the whole. I know James is big on the whole, does a lot of great things with the whole moving average himself, but you have that here as well. And then one other quick thing I did note before I've got an addition to this that was delivered to me by Mr. Robert Boucher, which I thought was a great addition. I'll show that here in just a second. But that is this higher time frame. What I wanted to do was highlight for you. Sometimes, these weekly chart patterns are really quite fascinating. Now, this won't actually plot on a weekly. Say, for example, I go to a weekly chart. This is how this could be potentially useful for you. Notice nothing pops up. It's all done around the daily. That's okay. But let's just say we put a simple moving average. Oh, shoot. Here's an exponential right at our fingertips. The one actually I wanted to use was, and this might be similar to it. I'll just use a 30, but oftentimes it's just a simple 30-day moving average on a weekly chart. So it's a weekly moving average of the 30, and I've got to actually click on it. Oh, wait, what happened? What did I do? I've got to actually show the study. There it is. And there you go. These can be fascinating. Now, this is an exponential. A lot of times the simple might be, it's a little bit slower, and you might see it right at the base of a lot of the weekly type pullbacks, which is interesting. And I figured, hey, is there a way to put this on the daily chart? Well, there is. In fact, let me take this off for now. But actually, so that right there, that exponential, you kind of get a sense of where it's at. So it's roughly in this, for Tesla, it's about 310. Let me show you over here. I'm going to go ahead and pull it up over here and point to I'll take this off for now. And I'm going to go back into the moving average itself it's already on there. I'm just going to go back to a daily chart. There we go. And those are our moving averages. Again, I wanted to take that one off. There it is. There. Okay, I was on the wrong chart. Okay, there we go. So now we have it off where we were before. But what I can do is I could go over and I could actually put on a different moving average as well. In fact, I could come over here. Let's say, for example, I could just select the back in our box. I could go to a different time frame. So I can actually see that weekly moving average, which is one I like to look at personally. I like the 30-week moving average. I think it does a pretty good job of hitting a lot of support levels and can be a very interesting point. You could bounce off it. Nothing's 100%, but it is one that I've tracked. This is one that could be used, okay, over a time frame. I'm going to go ahead and just throw this on here right now. And what that's going to do is it's going to plot these both on a weekly basis. Now, it was a simple moving average and the long-term one, and we have a 30 right here, but you can see that it actually shows us, and it has to make that adjustment each week, but it's great because at least it gives you a general sense of where's your 10? Your 10 weekly average, which is also one that's fascinating, the 10 and the 30. But you can see down here, a lot of times these can be interesting to kind of see on a bigger scale. But you can throw weekly moving averages on your daily chart. Now, let me share it real quick, and then let's just do this. Let's share it, and then I'm going to go up and pull up Roberts here for you. This is just moving average clouds for crossovers, and we'll share this. And again, all scripts are, that we share here are not guaranteed for accuracy. In fact, they're reliant on the data that's being fed into it. There you go. And that is the script right there. I'll just put it down here. That MA clouds is what I was referring to this as, clouds. There we go. So this is going to be showing up. You can copy that. You can paste it into the charts, and you can have that going forward. Now, let's take this one off, and I want to talk about the one that I did receive from Robert, and I really appreciate it because these are great. An addition that he had added to this that is, I think, is just fantastic. And so his is just the MA with clouds. I'm going to go ahead and share that as well. Let me just point it out to you real quick. MA with clouds. In fact, if you come over here, great place to, since I've already added, once you add it in, he's added in over here this great little explanation description. I'm just going to read that. MA with cloud. This script is used to provide a cloud fill between the two averages. User can choose the moving average types and length for the fast and slow average. Scripts are not guaranteed for accuracy. So he's got some additional details in here that I think I find uh, quite great to add in. In fact, I'm going to swap it out with the one I had, and I did already. Great. And let's go ahead and put his up. And there you go. So here's the difference over here. He's made this great addition. You can come down here. He's got his set at the whole moving averages. But you notice up here, you got the fast leg, slow leg, but you've got a fast MA type and a slow MA type, and you've actually got a displacement on that as well. So some really cool additions. I really appreciate that, Mr. Boucher, sending that out and sharing that with us. Let's go ahead and share that script as well. He did note in there, too, that these scripts are not guaranteed for timeliness or accuracy. Here is the next one. Clouds. Gosh, I could spell it. MA with clouds. So a cool addition there, and there you go. You got them both. All right. All right, Riceberg. Yeah, good to have you here. Got the late pass. Absolutely. Sharon, RS, Michael, great to have you guys on board, as well as Harley and Wiley. Excellent. All right, let's do this. So that is a moving cloud crossover. You got those tools, and yeah, could be really cool. Different time frames, etc., that you're looking for. I do like the other one too. I was just going to highlight real quick that I found for short term. You might find this interesting. I'm just going to use it right out here on Roberts. Here is it's an exponential type. I'm going to use the exponential, so you can flip this as much as you want. I'm going to use both of these exponential, fast and slow, and it's the 921, which is common out there. I've read a lot about it, but this is kind of like more along the lines of actually a possible swing trade, and you might be getting a little crossover. Yeah, I'm seeing a little cloud coming in right there, so that's kind of more of a swing trade time frame. Maybe just the flag portion of the move, right, going higher. So as you're coming in and you're breaking out, and that's the flag, you kind of get one down here as well. Notice you could just, it's pretty easy to see, and you could just kind of, a lot of times traders will just stick with that crossover until it starts to break over. This one was just kind of touched, but kind of actually just bounced off. I don't know if there was a red area, and it's giving us a signal right here. Well, as according to what it's showing as we see it right now. All right. So cool. All right, well, let's do this. Oh, by the way, last week too, there was a question that came in about the bull swing, and we talked about the bull swing, and that was, again, we were taking a look at combining a pullback in the market. This is the Dow Jones. We're probably not getting too much on the Dow. Let's go ahead and just pull in the S&P 500 here. We'll swing this guy over here, and take just a second to load up. But again, this is while it's loading, we'll just take a look at the formula of it. We're going to talk about, well, in this, it was the flag formation, and then also what we kind of designed as a trend. So it's the flag with the trend, and so it's got the price of the stock has to go above the 30-day high, a 30-day high over the last 30 days. So it's kind of a turtle trade was the way I was presenting it. And we can always have potentially a script on the turtle traders as well, an approach that they'd used. But a break of a 30-day high, this is over the last 30 days, and then we had described what a bull flag looks like in ThinkScript, and this is the code in here, and essentially what this code is doing is it represents a move to the upside. In fact, we have a trend to the upside, plus a move to the upside, and then we have a series of, and you'll be able to see in here in the code, prices coming back down between a 2 and a 5-day move on a pullback is what this was, okay? And the question is, let me just click on it again so we can get, okay, so we had, like, for example, CNC. I'll just pull it up real quick as a quick reminder, CNC, and you can see over here, CNC, it did break a 30-day high over the last 30 days. It was right there. That was a 30-day high, and we do that because we're trying to get a sense of the possibility of a new trend, right? So that's why that code is in there. And then you can see how the rest of the code reacts, and that is the move up. And then there you go. You get your pullback right there. Now, we already got a signal in terms of the 921 exponential crossover that we're using with Robert's script that he's provided here, the MA with cloud. That's already in place, but this is one that's got the flag now. So it's got the price pattern within it on the pullback, and so then we could be waiting and watching for the possibility of a break. Okay, that's where earnings come in. Now the question is Mike, that's cool. It's great that you have it over here in the column, but there are some issues loading these up. This is just the first one I chose, but why not put it on a scan? And so that's what I did do. I put it in a scan for you, and I'm going to go ahead and share that right now. Let's load that up right up top here. It's just the bull uh, swing, bullish swing. I'm not even seeing it. Oh my gosh. Oh, that's so strange. It didn't get saved. All right. Oh, bullish. There it is. It's bullish flag trend is what I called it. Different name. I've got to name them all the same thing, but let's go ahead and just show you what this does. So I'm going through the same S&P 500. Now we should get those same exact 3 or 4. There they are. So notice that came up a little bit quicker for you. That's one advantage of the scan. So I forget exactly who it was that asked for this, but I'll share it here in just a second. You get the 3 in here really quick. Now, how could this also be useful? Well, it could be useful if you were like looking at the S&P 500. You want to see if there was anything maybe in a particular industry. And even more interesting is that you don't have to have a small sort of basket of stocks that you might be looking at that could take forever to load. And remember, you can meet a limitation here on the amount of code that you can have, and that can also present another problem. You don't run into that on the scan. Scan for whatever you want. It's a one and done type thing. And so where that could be helpful is going into something like this. Let's say the NYSE itself. Now that's a lot bigger. I mean, that's going to be, so you're going to be looking at approximately 2.8 thousand stocks. Okay, much bigger than what we've been looking at before. Let's just see if we wanted to expand what we're looking at. It's actually closer to 2,900, but let's just see how quickly I can run through all those, covering those two conditions as we go through it. There you go. So there's actually 58 companies that might have something that looks like this. There's my black screen. Something like this. So you're getting a trend break, a cross above the high, a 30-day high break over the last 30 days, and a pullback here of 2 to 5 days. The cool thing is here is it is in a scan, and you can run it over large data sets like the NYSE, the New York Sandwich Exchange, right? Kidding. No, but let's do it. Let's go back over here. Oh, wrong one. The New York Stock Exchange is what I meant to say. And you go over here and you can see. So all of these would come up, and you could just come in and take a look and just see what pops up out of there. DHT, what's going on with DHT? But they should all follow that code. Again, nothing's guaranteed for timeliness or accuracy, but as long as the code is in place, it could be, I mean, as long as the data coming in is good, then the code should react appropriately or correctly. There's your high break, right? 30-day new high, absolutely over the last 30 days, yes. How many day pullback do you have? This one has this is a 2-day pullback from the high. We go to about 5, and we're kind of looking for that shorter term kind of a move. But what do you guys think? And sometimes, like we said, these can turn into somebody's favorite pattern here. I don't know. Who is it? I don't know if it's Roberts. David's? Somebody's favorite pattern is the cup and handle. And you always wonder, when you get that bull flag in there with the trend change, can you get that cup and handle pattern in there? That's the question. Yeah, dad joke. Yeah, a very bad dad joke. I've actually thrown some bad dad jokes in my X handle. But Wiley, yes, indeed. But hey, could it be a cup and handle? Yeah, we'll see. That is not a dad joke. Or is it? Maybe it is. All right, so there you have it. Let's share it. My gosh, let's just go ahead and share while we're at it. I've forgotten to do that, and then I get notified at the end. Some of the folks that want it, they let me know. I've seen some words come through that chat. If I forget that script, Let's go ahead and share it right now. But it's just the, gosh, I named this one the bull flag with trend. It's just the bullish swing. It's a swing chart trade. So I'm going to actually change the name of it, but it's just going to be the bullish swing scan. If I could get my words together, I would do it. There you go. Oh, by the way, I just looked at the chat box. There is a survey in the chat. Folks, if you get a chance to fill it out, that'd be great. I did go through it and read each one of those, and so too does my manager. I think it's only 2 questions, I think, and there's maybe a comment section, but yeah, I'd love, if you find something positive or whatever the case might be, just let me know, throw it in there. And I've actually assisted, I've got a number of topic requests in there, like, for example, topic requests we're getting here. I think that was actually in the chat. Sorry, that was in the chat, but it's another place to put those in, and it is there for you. While we're at it, yeah, if you like today's presentation, find something useful. No, I actually really do appreciate it. Smash that like button and be sure to subscribe. Bottom right-hand corner of the screen, 2 easy things to do. Hit that subscribe button and the like if you like it. All right, let's keep going forward here. And let's get into our key topic today, and we'll hit it. Yeah, that's right, Mike. Possibly. Let's see. Jen says, could it be a reverse Head and Shoulders coming? Oh, there you go. Yeah, what was it? DHT? DHT Holding. By the way, these guys ship, they issued a container shipment overseas, and that can vary over time. Normally, these guys have some pretty interesting dividend yields. The yields can be high. Again, since I mentioned that, just always note that dividends are not guaranteed. They could be cut anytime, cut at any time. But like, say, for example, shoulder, head, shoulder. Good point. Could be. All right. Yes, indeed, it could be. For sure. Now, quick note, since I did mention it, and then we'll move on here. But yeah, see, look at the yield on these. These container companies, they do have a yield, but I did say that little disclosure on dividends. These can be pretty. Let's see, how will the weekly chart look like? Yeah. Okay. There we go. Oh, that's a real long chart. Monthly chart. Okay. Let's talk about the parabolic SAR. And to do that, I've actually got to take our clouds off for just a second. We'll take that to show study. And what we'll do is we'll go in here and we will look at, shoot, we can look at anything. How about, yeah, just any stock. Apple, just as an example. And then we'll pull it up and we'll see what we can get. Because I have developed here today another scan that ties into the parabolic SAR. Folks, truly, maybe one of those indicators out there that I think was actually built for literally swing trades. And what it tries to do is it tries to highlight, and I'm going to read exactly what's going on behind the scenes here with it in just a second, but it tries to highlight a pullback, and it gives an indication in here. So you're getting this momentum indicator, also known as the PSAR or PSAR, parabolic SAR, which is stop and reverse. It's a reversal signal. Parabolic, that's where the P comes in. Parabolic stop and reverse. This was built, I want to say also, along with the RSI. It was an interesting year. It was 1978. Wells Wilder did the RSI. I think he did the parabolic SAR during that time frame as well. I want to explain it here in just a second, but let's put it on. By the way, anybody using the parabolic SAR, it's really used just for these swing moves. And so I intend to use this in my Tuesday class for swing trading as well as a confirmatory signal where prices might unfold and move to the upside. I think many traders will look and use it for that reason. Let's pull it up right now. Parabolic SAR, and we'll take a look at it. You actually have to do parabolic SAR, which is the name of it. It's not PSAR though. So let's click on it right here. Let's load it up. Parabolic SAR, stop and reverse technical indicator, is a study for analyzing trending markets when the price is in an uptrend. The SAR appears below the price and converges upwards towards it. Okay, if price, this just basically tells us what's going on. I want to read a little bit more in terms of the math and show it to you here in just a second. But as it states here, If the price crosses parabolic SAR lines, indicator switches so that its further values are located on the other side of the price, and you'll see that here in just a second. I guess one of the main points I wanted to note on it is that I'm just going to read this off a little note that I had made previously, and that is that it calculates the position from the most recent extremes, and why that's important is because on a pullback counter to the upward trend. So it's a counter trend pullback I'm just going to draw this as I'm saying it. After you have a trend up, it's a counter trend pullback. And there's a factor referred to, well, it's the AF, acceleration factor. That's the code behind it. And it increases as the trend continues. So each period is updated by adding or subtracting the product of the previous acceleration factor, which is the difference between the prior period's SAR and the most recent extreme price. And so it's capturing that trend and trying its best. I mean, what the indicator tries to do is really just identify that stop and reverse. Do we have enough insight, enough information to get this guy going higher through here? It's another layer, a very, very simple one that can be overlaid on here. And I'm going to click on it right now before we add to it. It does range between a 0.02 and a 0.2 in terms of the parabolic SAR, but these are standard defaults from Welles Wilder himself, and I found those to be most interesting. And that's what it is right there. Okay, so you can see this scenario setting up. And so it looks like sort of a moving average, but it's more like it's sort of an offset of the range, but it tightens and it strengthens based upon the strength of the trend. Take a look over here. Do you see how the SAR? Okay, let's just highlight this range. I gotta do this. We'll take a look at this one for now. It's a pretty good example of it. Do you see the SAR? This is the acceleration factor. When prices are pretty bullish, the ranges on these dots is what they actually are. Although I did a code where it's a line, which is kind of interesting. I actually smoothed the line as well, but you can see that it does a fairly good job of keeping up with that trend. And if prices move down quickly, right there, what happens? Right up top, you'll see that it begins to say, well, the same code so that we would also have a trend. Because sometimes, for example, look over here with me. Do you notice that this, when the trend is to the upside, as you can see over here, when we start to take out highs, what were we just looking at? The 30-day new high? 30-day over the last 30 days? The 30-30, I guess you could say. 30-day new high over the last 30 days. Just observe this with me. Look at the length of the trends on the upside. See how long they last? Once the trend is confirmed. Now that you've seen that, let's go ahead and do this. I'm going to go over here now, and we're going to use a different color. We'll use red. Well, let's use yellow. We've already got a red. Look at this over here. Look at the upward moves on this. In this case, I got to zoom in. Okay, that's a downward move. Look at the frequency or how long these upward moves go. Look how precarious they can be. Look at this, very low. I mean, it'd be very, very challenging, I think, to trade something like this or like this right there. Look at the difference in the length. So I think the parabolic SAR is really, really interesting, but we can enhance this potentially significant using the trend. We'll just say this. We'll say it's an enhancement with the trend, which a lot of traders will look to for an improved probability of success, right? That was just a small snippet of what was going on. Look at how long it is on the upside when the trend's going down. I mean, these PSARs are very, very good. It got a little choppy towards the bottom when you weren't really getting a bigger drop in the move, but that was a substantial dip on the downside, and it captured that whole thing. But the trend is the key. So adding in 30-day high over the last 30 days is going to narrow this down substantially for us. And that's exactly what I did. So let's go ahead and pull that up right now. And then we'll go into a different script, and I'll share that too. Now, I know what I named this one. This is going to be the PSAR trend, the parabolic SAR. And I'm going to scan it right now. And, oh good. I thought I was going to order the NYSE. This one takes a little while, and I'll explain that to you in just a second. Remember, it's going back over 30 days and looking for highs over a 30-day period. And, but, I mean, you could be doing something else while you're waiting for the scan to occur as well. But there's a little bit more to it because it's going to, well, hang on. Thought I'd pull it up by now. Looks like it's not going to. So what I'm going to do, I'll pull up the script and explain it in more detail. Still waiting. It slowed down. Mine didn't take this long. Mine did take about 15 seconds, but not that long. I'll leave this open over here and we'll talk about what's going on within the codes, and we'll actually see it pop up. Anyway, so a couple of different things. All I simply did here, and we talked about this previously, folks, is we took the parabolic SAR code right here. That is the PSAR. And I just literally, I just scraped that right from Thinkorswim. So I got the code here, right? And we know what's going on here. Now, I added a couple of additional details on that. And let me just move this up so I could see it a little bit better. And we'll go through each one of these here. All right. So we defined the parabolic SAR. We have a condition here. We have, first of all, that the parabolic SAR is a flip. All I'm looking for is the upward signal. And once you do these for a little while, they become really, really easy and straightforward to do. You're just saying the parabolic SAR of yesterday was higher than it was the prior day. There's a flip in that. Okay, I got the code right there for you. You also have, so that's the check on the condition, but then you've got your 30-day price channel that we've added before as well. Now, I did say this. I said, check if the PSAR upward signal occurred within the last 2 days. In other words, it doesn't have to be today. In other words, the signal came within the last 1 to 2 days. This says a day ago. Now, if I wanted to have it, several days ago, I could put a 5 in there. It would look back further in time. I'm not getting any results. I might have to just do this again. So let me just clean this off. Let's see. And go back to this. Maybe I'm going to try a shorter term one first. It's still showing that. That's so weird. I hit the scan again. I don't know if it'll speed it up or not, but let me go over here. I still remember a few of them that did show up. There's this, okay, so AVGO was one that came in here, and I'll show it to you. There was only, I think it was 12 on the S&P 500. There were 4 on the NASDAQ. We'll try the NASDAQ next, but let's point it out here. All right, folks, did we get a break above the 30-day new high? Yes, we did. That was a 30-day high, I should say, a 30-day high over the last 30 days. This is within 30 days, we saw that break. Identifying uptrend here. So that's the first part of it, or one of the conditions. It's actually towards the bottom of the actual code itself, but that's fine. That's just condition number 1. Condition number 2, the parabolic SAR within the last two days, or 2 bars. Do you see it within the last 2 days or 2 bars? Right there. This is a further indication of the possibility of a break higher in the trend. Any questions on this? We can add a lot to this. I mean, we can add, actually, what we could do is we could add volume to this. Actually, all within one indicator if we wanted to. Would reduce our results pretty substantially. But I think, an enhancement of the parabolic SAR, like I said, it could be quite interesting, but really on the short-term scenarios, right, that we might be seeing in the market right now. We're seeing a lot of volatility. Do we break out higher on some of these flag patterns, or do we not? So it's an additional form of a confirmation with that ThinkScript code for the trends, the same code that we used last week, because it's so durable. in terms of the 30-day high over the last 30 days, right? Remember how we got that again? We used the price channel to help us with that. So I made sure to note everything in the code that we were looking at. But again, 30-day, a break above the 30-day high over the last 30 days, and then the parabolic SAR indication off the bottom within the last 2 bars. And you can change that as I'd shown you. It doesn't have to be one. It could be that of the last 5 bars. It could be the last. You could put 0 there, and it just means that today we're getting a parabolic SAR change in that code that I'd shown you. Now, still waiting for results. It froze. I don't know if it froze up, but I'm going to go over here and let's just take it off. And I'm going to pull up the NASDAQ 100. We'll do a much smaller list. I'll go through that code again here, but okay, there's our NASDAQ 101. All right, and we'll load it back up, and it's probably because I'm doing this in a live format, perhaps, and there's just, I don't know if it's bandwidth issue or whatever, but I'm going to click on this, and we'll see. I don't know why it's holding up. That's so weird. There it goes. Cool. There was actually, yeah, this is the S&P 500. So I flip back. There was 12 before. I think there's 13 now, but there you go. AVGL right there. See, guys, I remembered 1 out of 13. Isn't that great? 1 out of 13. Didn't remember anything else, but let's take a look at Dexcom. Coming off the bottom, BDX, but there you have it. Dexcom, BDX, let's see, DXCM. Within 2 days, did we break above the trend? Go through and check those conditions to be sure. Actually, you can see the breakout. PSAR right there. I think we could add something like a money flow, divergence. There's going to be a lot of cool things we could do here. Besides the a money flow divergence could be interesting even without the trend. Say, for example, that's another think code enhancement to an existing indicator, in this case, the PSAR. But there you go. Okay, interesting. What happens there? You can take a look at it over your 3-day weekend. Let's see, BDX, if you wanted to. Okay, this is kind of a fascinating one. Did we get a break above the 30-day bar? Yeah, let's test it out. Let's just do it. Let's just go through and make sure. Where are we at right here? Let's go back 30 bars right there. So actually the break would have been over here. So, and you can see the trend break right there. Higher high, higher low. This is a really kind of a sloppy looking chart. I mean, over here, look at the range on these things. The range would be the height of the low. I mean, there's just so many candle wicks. But anyhow, that's interesting. Yeah, that's not as clear, is it? But there's your one. PSAR. All right, let's get this. I did share it, right? Yeah, I think I did. Just in case, let me just do it again. Let's do this. Let's go back to our scan tab. If this is a scan, and I can put this, though, if you want, I can put it in the column format too, the market watch column format. We could do that as well. But let's just go ahead and share this. I don't think I shared this one yet. Let's share it. And that's the PSAR with that price channel breakout. And I'll put that in the chat right now. And we'll go from there. Okay, so PSAR. Okay, this is the scan. And by the way, anybody that is viewing this not live or on the recorded version, I always have this, every one of these scripts that we've got here, it'll be posted under the description section, and then just under more is where you'd want to take a look at that at. So under more, you can copy and paste these. Just remember, and I'll put in there scan column chart. So that way, like same with Robert Boucher's, we can put that, just under a chart format. So you got that down. But there you go. Okay, there it is. I just threw it in the chat. Yeah, it's an interesting indicator. By the way, Jen, that goes back to, like I said, I think it's 1978. So a lot of these that I've seen over the years, the RSI, what happened, Wells Wilder had actually employed a number of engineers during that time frame. He really got into the markets. And RSI Wilder, for example, ATR, that's a Wilder, I think same year as well as this one, but he employed a group of engineers and they built them. But Little history there that not useful at all, but it's been around for a little bit. Okay, let's see what else. Any questions that we have? Any questions with the codes or anything I can help in that regard? Uh, Throw those into the chat. Appreciate James helping out. Again, folks, there is a survey link in the chat. I'll go ahead and just post that since I got it at my fingertips, boy. There you go. And yeah, if you get a chance to fill that out, that'd be great. Let's see what else. That is, I'm just saying, like thinking ahead into next week. There could be some cool things we could do with volume here. We don't have to stick with the parabolic SAR, but really interesting, and particularly when you get a market that's got, say, for example, the VIX. Oh, now we got the parabolic SAR and the VIX, but the VIX has been quite volatile as of late, and I mean, really the markets in general. It's an interesting time frame. How many times have we come up to this level right here? Ooh, we're just barely getting a bar right there. What could we be waiting for here? Well, I think reviewing just a couple of prior lessons, maybe this over here, we could say is right over there, right there, trend line break. First time we're actually getting a trend line break is of today, and the parabolic SAR could be fascinating. By the way, there are some pretty cool ThinkScripts out there. I think that we could do it. I think it's possible. Sometimes I say that is not. I really can't find a way to do it, but a trend line break, wouldn't that be a fun one to take a look at as well? So that could be interesting. All right. Well, on that note, folks, always great being with you. Yeah, utilize this. Utilize this over the weekend. Go through, take a look at some of these scans and just see what you can spot in here. It's really a way just to narrow things down a little bit. Today we talked about using the parabolic SAR. We talked about adding the trend aspect to it. You've got the codes there. You can review those codes. You can adjust those codes as well. And any thoughts, ideas, definitely throw those in. You do that in the survey link or in the questions here. But on that note, good being with y'all. Folks, have a fantastic extended weekend, and we'll see you next week.